This is Alan Bush with the Daily Financial Forecast for Tuesday, June 14th. Starting out with the stock index futures, we did see some pressure in the overnight trade. Much of this linked to weaker crude oil prices. Also, we have the uncertainties of the referendum on June 23rd in the UK for the UK to leave the European Union. Although I think those negatives are way overblown as far as a market impact. But traders seem to be looking at that and acting accordingly. Longer term, though, we feel that stock index futures will continue to advance. We may see just a sideways trade in advance of that June 23rd referendum. But after the referendum is out of the way, expect a new leg up for all of the major stock index futures. Now, moving over to the currencies, the dollar index advancing for the same reason that there is pressure in the stock indices, namely that uncertainty concerning the UK referendum. Also, we are seeing some pressure in the euro currency. This after the yield on the 10-year German bonds fell to a new low. In fact, it is now at a negative return for the first time ever. So that undermining the euro currency. Also, we are seeing the pound under pressure again. This after 4 recent polls showing the Leave faction now in control, gaining on the Stay faction. So that putting some pressure on the pound. We do feel, though, and this is somewhat of a minority view, but it's starting to gain some traction, that in the long run, if the UK does decide to leave the European Union, it could actually be a benefit since it could eliminate some of the EU restrictions that are imposed on the UK economy. So in the short run, the referendum, or at least in advance of the referendum, that is a bit of a negative influence, and we would expect lower prices for the pound. After the referendum is out of the way, maybe several days later, I would expect gains in the UK currency. Now, moving over to the interest rate futures markets, flight to quality buying coming in, especially at the long end. Of course, it's the UK referendum that is causing the flight to quality buying there. We feel that in the short run, the 30-year bonds will probably continue to remain firm, at least in advance of that referendum in the UK. Once the referendum is out of the way, I think the fundamentals are evenly balanced, and I would look for a sideways trade, maybe some profit taking to come in. Also, we continue to like the gold and silver, precious metals, benefiting from the uncertainties of the UK referendum, not to mention inflation that is starting to grow globally. So I think the best longs, at least for right now, are in the metals, the precious metals, and I would expect to see some new highs for the move either later this month or in the month of July. Also, this is probably going to be a long-term move that will last for several years to the upside in both gold and silver. So good trading, everyone. And once again, remember, these are my opinions alone and are not the opinions of ADMIS or Archer Daniels Midland.